Welcome to episode 40 of the 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Ricky Lee, standing in for Jonathan Brown. Each week, we bring one stock, one headline, and one reason investors should care.
This week, we're talking about Roots and Kits Eyecare, a pair of publicly traded brands likely to generate accelerating revenue over the holidays and pique investor interest.
And I'm going to keep it cozy this week because my pick is Roots, ticker ROOT on the TSX, the unofficial uniform of Canadian winter. The heritage apparel brand, known for sweats and leather goods, has been dressing half the country from November to February since 1973. And investors are warming up to it too, with the stock trading up 0.59% as of the time of recording. Not a bad little lift going into the holiday rush.
All right, Ricky, lay out the big picture for me. Give me some context here.
Well, Roots has a major catalyst coming up. The company is set to report Q3 fiscal 2025 results on December 10th. And for retailers, Q3 is the one everyone circles. It captures the lead-in to holiday spending. So if Roots shows momentum in categories like sweats, outerwear, and leather goods, basically everything Canadians panic buy in December, it could reshape sentiment around the stock.
I see. But in terms of what our listeners would be interested in, could you please delineate the investment prospects Roots offers?
Well, there's two things really to consider. Firstly, margins are getting healthier. So analyst coverage this year has highlighted improving gross margins and tighter inventory management. And in retail, that's the difference between struggling brand and viable turnaround. And secondly, this is peak Roots season. So holiday gifting plus colder weather plus brand loyalty equals the quarter where this company historically performs its best. A strong holiday quarter could set the tone for the entire fiscal year.
Right on. The question of the hour is, how has the stock been at reflecting company milestones?
So Roots is still very much a small cap value play, currently trading around $3.41. Analysts roundups frequently flag Root as a potential turnaround candidate thanks to its low entry price and improving fundamentals. It hasn't had the explosive lift that some retail peers have enjoyed, but the stock has held steady in the low single-digit range, reflecting cautious optimism. For value-driven investors, that combination of brand strength and low valuation and operational improvement is exactly the type of setup that gets attention.
One last question for you, though, Ricky. What should listeners watch out for when Q3 numbers finally drop?
Well, the big questions will be, are margins still improving? Did holiday demand lift revenue? Has inventory tightened further? And is management signaling confidence heading into the final quarter? If Roots can check even a couple of those boxes, the market may start re-rating the story from legacy retailer to quiet turnaround. But what about you, Trevor? What stocks do you have under your tree this week?
Right, Ricky. Well, my retail brand to keep tabs on this Christmas season is Kits Eyecare, ticker KITS on the TSX, which manufactures and ships affordable glasses and contact lenses around the world.
And can you tell our listeners a little bit more about that stock?
Kits Eyecare posted record-breaking sales over Black Friday and Cyber Monday, representing the best weekly performance in company history, begging the question about the company's longer-term financial track record.
Why should investors care about that, Trevor?
When we take a look at Kits's financial history, we actually find a multi-year track record of profitable growth, more than doubling revenue from 2021 to 2024, with operations gradually ascending into net income profitability, posting a gain of $3.1 million in 2024. This means that the company is putting its best foot forward in terms of fostering shareholder value.
And how has the stock responded to all that?
Unsurprisingly, Kits stock has added about 87% since 2021, tracking its attractive income statements, outperforming the TSX by a healthy 10 percentage points.
Wow, okay. And so how did Kits perform over the most recent quarter?
That would be Q3, and the company actually delivered net income growth of 1,367.4% year over year, which is a staggering achievement, thanks to record-setting figures for both new and returning customers. This prompted co-founder and CEO Roger Hardy to set investor expectations in the Q3 news release, confidently stating that the company is on track to create value and transform the eye care industry over the coming quarters. This really means Kits Eyecare is one to watch for the fundamentals-driven small-cap investor.
Great. And as always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you could find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with Roots and Kits Eyecare and is intended for informational purposes only. For full disclaimer information, please visit themarketonline.ca/disclaimer.